What is a business plan used for equity? Or how do you craft a business plan to attract equity investors in your startup venture? Okay, let's talk first about what investors in a startup venture are looking for. Investors are generally looking for growth-based businesses. That is, they aren't seeking to invest in slow growth or smaller businesses that don't have the potential to grow at an exponential rate over generally a 3 to 7 year period. Startup ventures, by their very nature, are growth-based. That is, they can use capital, and for every dollar they invest in growth effort, generally marketing, they are able to acquire customers or grow at a rate that's far more valuable than that dollar. Generally at a rate that's anywhere 10 times, 20 times, 30 times or more valuable than that dollar. Because what they're doing is they're using money to, again, grow the customer base, the user base, and they're trying to scale their business and operations across whatever markets they're serving. And so they're looking for a repeatable business model that is highly scalable, subject to extreme growth. Now, with that being said, that affects what they want to see or hear about with regard to the business. So when it comes time to attract investors, it normally begins with a business pitch and just a simple demonstration of certain aspects about the business. First, the team. This is the most important part. Investors can see the most attractive idea in the world, but if they don't believe the team is able to carry it out or accomplish it, then they're not going to put their money there. They have to have confidence in the individual. So the team is absolutely the most important. So making certain that you lay out the history, experience of the team, their knowledge in this field, their ability to recognize the hurt, need, want that they're solving is essential. So laying that out first, the team members, the background, what knowledge, information they have that is going to build up their credibility. Okay. Then the business concept. What are you doing? Why is it of value? And to whom is it of value? Okay. This is very similar across any business plan. What is the crux of the value you're delivering? And why is this of value to someone? So you can see the size of the market that you're serving. You can gauge the priority that they will have in purchasing the product or service offering that you're providing to them. Then they want to hear about the competitive strategy. If this is a recognized need or want that you're addressing, then there are likely competitors or at least substitute products out there that are meeting that need or want. How are you going to stand out? What is your competitive strategy? How are you going to establish a competitive advantage for your business among others? Are you a first mover in the field? Are you differentiated in a way, faster, easier to use, new technology, that type of thing? Are you able to produce the same value proposition at a much lower cost than competitors because of some intellectual property or scientific method you've come up with or strategic relationships that others can't have? What gives you that form of advantage? That's critical, because business by its very nature becomes very competitive immediately as soon as there's recognizable value in any business. This is to the benefit of the customer, client, or end user because it pushes down prices, but at the same time it cuts margin or profit margin for businesses that are trying to offer that value proposition. So if you're going to grow at a very fast rate, obviously you have to have a very competitive strategic position to be able to grab that much of the existing market. What is it? What is that for your business? Explain that, lay that out extremely well. And then you get to the financials. Unlike in a business plan where you're looking for a loan and the loan officer wants to see that you're using all of the available resources or money to spend on equipment or inventory, something that can be repossessed or reclaimed if you're unable to pay off the loan. Investors don't get paid back like a loan. They are looking for the business to grow. They realize if the business isn't successful, they've probably lost all their money, but if the business is successful, it's going to be worth a lot more than the money they put into it. It's going to be a very high return on investment. So they are focused primarily on marketing and growth. They want to see growth projections that are extreme, exponential, scalable growth. And usually this requires a significant investment in marketing. So they want to see how you're spending the money on growth efforts. They want to see your marketing budget, where you're putting your money, and how that money is going to translate into growth. So focus on that aspect rather than focusing on aspects that you're going to pay team members or you're going to pay for equipment or things like that. Those are essential, but again, you're going to need to focus on the growth element. And then they want to know what you're asking for and whether it's reasonable. So an investor is generally going to have a lot of knowledge in this area, generally about transactions, about what a business is potentially worth, but you're going to want to present the argument of, we are asking for this amount of money in exchange for this percentage of the business because the business is worth this based upon comparable transactions that we see out there in the marketplace. It's very difficult to value an early stage venture, and it's very difficult to value a growth-based venture because traditional models of discounted cash flow over time just don't work because, again, it's subject to growth, and the exponential nature of it and the occurrence of losses throughout that entire growth make it very difficult to use traditional cash flow methods to value the business. So you need to offer some industry comparables and some comparable businesses to show the investors that this is indeed a viable opportunity for investment, and these are similar types of deals that have happened in the past and similar types of businesses that operate in this field or industry. So collectively, this is what a business plan should contain and look like if you're using the business plan to attract equity investors.